Hey, good morning, guys. So I had a question at the end of last week in terms of some examples and this, that, and the other, right? And I think from the question itself, it's clear if some of you are still thinking like this, you're overcomplicating it, right? You're trying to find too much data, you're trying to find too much information. You know, the idea behind the mechanical setups, right, was kind of almost like the back end of the bigger time frame stuff, right? So, in a nutshell, whenever you're looking at the charts, you're doing one of two things, right? You're looking at the much bigger time frame, the much bigger picture, and you're using that information, right, at that particular point to trade longer term, right? However, when you bring in the mechanical sessions and mechanical ideas around the trading and the entries, right, you are still using the external factors from those higher time frames, right? So you're still using the bias as a whole, okay? So on the 5th of January, I put together this video, right, showing, this is a level, right? We were up here, why we were coming down, right? There's obviously liquidity in and around there. You've only got to look across to the left. I'm on a 1 hour time frame at the moment, right? But I'll show you this on a higher time frame in a second. Again, similar kind of things, right? We had this massive consolidation sideways before we broke, right? Now, I'm not looking at this and saying, what count are we in? What's the stochastic saying? What information can I get? Where's my movement? I couldn't care less, right? The only couple of things that I've looked at is we had liquidity over there, right? I wasn't trading this down because it was Christmas time. It was obviously a lot of factors. We had, the presidency changing hands and so on. So there's a lot of things where you just say, hey, look, walk away, right? Walk away from whatever it is that's kind of clouding your judgment, right? If you don't know up or down, don't trade. And it's as simple as that, right? So what I wanted to do was I wanted to look at this and I wanted to say to myself, right, well, we've got all these factors. We've got Christmas, President Trump coming in. We've obviously got this consolidation that happened, right? And it wasn't until here, really, right? Because this hadn't made the low and this failed to take out a new high, right? So your clue really is all in this box, right? I haven't looked at an A, a B, a C. I haven't looked at a 1, 2, 3, 4, 5. I haven't looked at a Fibonacci extension. I haven't looked at a stochastic. I've looked at nothing other than what is the chart trying to tell me. The chart is telling me, right now, it dropped for a spike. We failed here to make this new high, and we've created the new low, right? So in a nutshell, the higher time frames we know are down. Right? Looking at a weekly time frame, okay. Now the higher time frame's down, okay. So this bias for me. So I look at the chart and I say to myself, what am I wanting to see? I'm not expecting any major pop up here, right? So again, I haven't used stochastic, I haven't used, RSI, I haven't used moving averages or MACD, nothing else, right? All I'm looking for is the continuation of a trend, zero else, right? So when you start bringing the pieces together, we can go in and we can say, well, let's look for an Elliott wave count, let's look at these things. And these are the things that, more as a student, someone that is still learning the process, these are good exercises for you, right? Because an Elliott wave count is always going to be, it's always going to be kind of on your own bias, right? It's always going to be regarded as subjective. It's always going to be something that is regarded as, different. I mean, I keep saying this time and time again. You can ask 10 Elliotticians in terms of a wave count and you'll come up with 11 different answers, right? So in terms of this being very subjective, you just got to have the brush strokes, right? Especially when you're trading on a 1 hour time frame or a 4 hour time frame. What a monthly Elliott wave is doing is almost irrelevant, right? The only relevance that you have is that it's giving you a direction up or down, right? So I'm looking at this and I'm saying to myself, I don't need to know what part of an Elliott wave count that we're in, right? I have a couple of options. Option number one is the fact that we are clearly in a downtrend, right? We don't break this weekly downtrend until we come up above and we start making higher highs, right? Higher lows. So for me, downtrend, right? Simple as. Now, let's assume that from this downtrend, right? What I was talking about in terms of looking left, we have this liquidity, right? There's the low there because we started making, a high here. We failed to take out the prior high, right? We come back down. We failed to take out the prior low. So there's your first sign of a potential higher high. However, what does this do? Right? This fails there and there. Right? So when I say it failed, right, it actually did come up and make a higher high, but we failed to really breach it. Right? Now this comes back to another question in the same vein, in terms of confirmation. What are you looking for confirmation? Well, just think of this as a road trip, right? This road trip that we're going on, if we blast off and we're going extremely fast, hitting a destination means that we've almost run out of juice as we get there. If we instead come up, come back down, right, we start to reaccumulate, and then we go again, the chances are we can breach the same level, right, because now we have more juice in the tank from this reaccumulation. So it's common sense. Now again, I'm not trying to complicate it, right, and neither should you. The general idea is, if you've got this bigger bias, my biggest bias is down, right? I know that I want the DXY to spike, 118, 122. So in terms of euro, all I'm looking at is my bias is down, my DXY is likely to go up, again, reaffirming that euro should go down, right? Now, I'm not saying it has to and it will, 100% guaranteed, that's not the point. Now what I'm looking for is, in terms of the bigger picture, right, what are we trying to spot? What are we trying to find? So let me get rid of these particular drawings, right? Because I've got these daily view, weekly view, and I'll start all over again on these, right? So, as I said, we've got this low, right? So at the moment, this low is a pretty big low, right? We've come down and we've obviously clearly rejected from it. So let's have a little look over to the left and see if there's anything over there. I'm going to put this again just to give an idea, right? So there's a big gap in there, right, that clearly this took liquidity from. What do we have underneath it? Well, more of a gap. So what do you think would fuel a move up? Well, fueling a move up to any great extent would actually mean tapping into this liquidity, down to up. So I'm simplifying what I'm looking for. I'm not looking to make this hard on myself, right? I'm not looking at the indicators. I'm not looking at anything else. I'm saying, what is the chart trying to tell me at this point in time? Right. All that being said, I've got a clear downtrend, right? We've got lower lows and lower highs. I've got liquidity down there, and I understand and appreciate that on a weekly time frame is potentially a weekly gap, right, in terms of not being filled. Now, clearly there were buyers at that gap, right, because obviously the price shot through previous price points. So if you've got buyers in an area, right, what do you think needs to happen for the buyers to kind of gain that control again? Sellers need to push that down to an area that ultimately triggers stops and fearful selling. Right? Now, this is why you tend to get a move that won't just come down and pip this. The move will likely come down, refuel, and pip through it. Right? This creates a sweep. Now, in Wyckoff terms, that sweep equals some kind of spring event, and you get a similar thing in the opposing direction. Right? So again, I'm not looking at what this is from a Wyckoff point. I'm not looking at this from an Elliott point. I'm saying I'm trying to simplify this, right? And this is the whole point of the mechanical system, right? Now, as I said earlier, if you were still learning this, I think you would appreciate spending the time looking at your Elliott wave caps, right? Looking at the Wyckoff situation, but kind of have it almost to throw it away, right? Have it to know it and understand it, right? In terms of a day-to-day, I'm not using Elliott, I'm not using Wyckoff on a day-to-day situation, right? Elliott and Wyckoff for me are the same thing, right? Like I talked about Bitcoin, 2021 and so on. The reality is, ultimately, once you've got a general idea of that direction, right, it's giving you the concept into the future. Right? Now, again, go back to Bitcoin. That particular move and the move that we've just had, if you go back to one of the videos that I posted when we were down at 30k, the issue that I have for me is if this was an expanded flat type move, 108, right? And I'll find the video, 108 was capped, right? And the reason for that is without any more fuel, where else can you go? So in the grand scheme of things, all I'm using Elliot for is to tell part of the story in terms of what I'm looking for. Now, back to Euro. I'm looking at this and I'm saying exactly the same thing, right? I'm looking at this and I'm saying, well, we've made a high, right? Here on these smaller time frames, right? And we've made something that doesn't really look impulsive. This could be deemed as impulsive, right? But then all of a sudden we start to make these, very slight moves, and all we're doing is we're ascending, right? Then we have obviously the break and a retest. Well, that retest for me is saying, well, okay, this doesn't really look like a powerful move to the upside. That powerful move to the upside, right, isn't giving me confidence. Knowing that my bigger trend is down, this isn't giving me confidence that we want to start now making new highs. Right? So what we then do is we drop down again and we fail to make this low, as I said, on the smaller time frame. Right? And what we then do is we come back up and we ultimately sweep the higher time frame, but fail at this level, let alone this level. So for me, my controlling factors are still pretty much there and there. Right? So again, I've just simplified and I've walked you through the scenario. When I come to the chart, I see this in 4 seconds. Right? For me, it's a line there and a line there. So only two things I'm worried about on a weekly time frame. Right? Right now, my weekly time frame is very unlikely to change, right, in terms of my bias for several weeks, several months, right? So my bias right now, until something happens, this could be, a major news event, a tsunami, something like this, that it could change the market dynamic as a whole. My overall bias on Euro is currently, until DXY strengthens and takes out 118 minimum, right? My bias is believing that ultimately Euro will fall. Right? So with that in mind, all I'm now doing is kind of replicating the process onto these smaller time frames. So my external swings right now are here and here. Right? Now I'm looking at the internal swings. Now, internal swings, I'm basically saying, well, I got my external in the blue. Right? We obviously took out this high here, right? We kind of failed overall. So this one's going to be a key level for me, right, on the smaller time frames. We then come from here and we see that this was a key level that clearly we've breached. So instantly, I now have a low that I can mark up there. I'll change the color on this. Right, I'm going to change this to green. And I've got obviously a high sitting up there, right? That I can look at these two levels and I can say, right, I got an external being blue, an internal being green, right? Now, again, as I've said in some of the videos, if you want to make this simple on yourself, go something like, green, orange, red in terms of the size. Change the line width, for example. I can put that as, line width 2. I can put these as line width 4, for example, knowing that these are bigger than these, right? Anything that makes it easy on yourself, right? So once I've now got this kind of marked up, I'm saying to myself, right, let me tell more of a story to myself. This high was created, which failed, right? Which means this is going to be relatively strong, right, in terms of a move to, right, hide spelt, strong, right, to the upside, right? So we've got this strong move to the upside because as it rejected from this level, right? Now, again, this last, buy before you sell area in there, right? This last couple of candles here, dropping down a time frame, right? You'll see where the strength is inside that, right? I'll just delete them so you can see them on a small time frame. Now, what we then do is we come down. Now, bear in mind, as we were tracing this high move up here and we broke through there, this really was the last swing low, right? We can class this as an area last swing low. We clearly come and we breach that last level there. We drop through, we come back and we test it and drop down again. Okay. So the thing is for me now, I'm looking at these levels and I'm saying, well, what does that mean? Well, we've breached through that low, right? And we've actually created a pretty decent move through because this is a weekly time frame, right? So from that high there through, right? 2 to the left, 2 to the right. This candle becomes quite important to me. Now I'm going to change this to say pink, right? Now, obviously, the same low there has held, right, on that bigger time frame. I'm looking at a bigger view rather than bigger time frame, right? Because I'm still on the same time frame. So this bigger view, right, has held. I've got now my kind of internal, external, and a kind of semi-internal type swing. These are the areas of importance to me. Right? Now, let's drop down onto that daily time frame, and let's see what we're actually looking at on a daily point of view. Well, we knew that we're in the downtrend, which means here to this high, right, is regarded as a pullback of a downtrend move. This is a pullback, right, of a larger move. Now, the reason I'm saying it's a pullback rather than a change of the character and a change of the trend is this doesn't feel impulsive. So we haven't got the fuel yet to move up. We knew that the price on the external range is where all the buyers are sat, right? All the buyers are obviously down here. And therefore, if this is only a pullback, look at the lack of impulsive motion that we're actually seeing, right? So again, kind of not interested, right? This isn't a let's take this long. What I'm looking to do is to say, right, all of my bias now is starting to align. Right? My bias is currently down. The fact that we've come up, right, back down, we failed to make a low, we've come up, we've come down, right, we've got now a higher low, right, we then come up and make a higher high here, right, this is the HH, right, we obviously come back and we make a new low, right? So this is now a higher low again, right, so in this point, we're seeing technically an uptrend move, right? How uptrendy does that feel? How uptrendy does that look? Right? That doesn't really give me much confidence in terms of taking this, to the moon. And therefore, all I'm looking for is what will I see in terms of a change of the character. Now, instantly, on this daily time frame, one thing I notice, clear as day, is that as the price topped here, right, we took out the prior low. So there's a swing low on the way up. So although we got a higher high, we took out this. So I'm going to look back to my left. And I'm going to say on the left, what do we have over here? Oh, what a surprise. A double top. All right. So again, the bias isn't to take this long. The bias is to say, what is the rationale to support my short situation, my short bias, my short movement, my short time frame type trade. So I'm looking at this and I'm saying to myself, right, well, we've got this kind of double top. Right, so this is the first thing. We know that we've got a strong factor play to the downside in terms of liquidity. And we know that we've been going up in this kind of limp fashion. All of these things tell me that I'm just not interested in a long at this point in time. So again, what I can do is zoom in even further. I've now got this being another high, right? I'm going to change this to purple, right? This purple, let's mark this up as a strong high. Now the reason that it's a strong high is that it took out this prior low. Okay, so what we've done is we've breached the low and we're now coming back to retest. We've got a gap sitting in there. Right? So, let's look at 50% of the gap, for example. So again, if you want to get really technical, we could come in, we could probably mark up, let's do a markup, put the magnitude on to get this accurate, right? There's the bottom of my gap, there's the top of my gap, the 50% marker of my gap, right, is sitting something like this, right? So again, I'm just thinking, what do I see as we start to approach this kind of level? Right? Is this the end of that pullback? Is this the start of the pullback? What kind of reaction do I expect to see when we get there? So at this particular point, right, still no stochastic, still no RSI, still no MACD, still no moving averages. I'm not even looking at volume at this point, right? I'm just looking purely at the story the chart is trying to explain to me. Right? This isn't, this is where for a lot of people they overcomplicate it, right? It's kind of looking for too much information, too much data. All I have in the back of my mind right now, I don't even have to write this down anymore. I'm looking at this and I'm saying to myself, bias down, bias down, bias down, right? My weekly bias is down. Now at the moment, my daily was obviously up, right? We saw this pullback move. However, now I've zoomed into these smaller time frames and obviously just jumped onto a 4 from the daily. What I'm actually seeing is that this high obviously didn't look very strong. We rejected, right? As we break through this level, which is why I've got obviously the marks there, right, from the 50% of the gap, we've obviously marked through and we've broken through there with some pace. Right? We've obviously got this low here, right? So these are all things that I've kind of mapped out and marked out in my mind, right? So what I'm saying is that we were having a weekly move down with a daily pullback, and that daily pullback could have, well, I'm not saying it has, could have potentially changed its character because we've come up with this break of structure, and as soon as we broke the structure, we failed to hold the structure. Then we come down with a low, right? Then we come obviously with a lower high, and instantly we push and we power through, which means for me, the change of character happened, in a couple of places, right? There was there and there for me, wiping out the bigger change of character. So what am I seeing on a 4 hour time frame? Well, I'm seeing now obviously a move up. I don't really like this in terms of the open. This was probably the midnight slash overnight move with a nice spike in terms of down. I don't like those volatilities that cameras on the weekend or have going into the weekends, coming out to the weekends. And that's just a personal thing. There's too much there that doesn't really tell the story. So although I can see this being a low, right, I'd probably rather go, here to here to here, and just kind of treat that as a slippage, right? So we've got this now in terms of a move, right? We've got this move that we've clearly powered through, right? That's the only thing that I'm really caring about. We've made a low, we've made a new low, right? Doesn't matter about this low for me. This is still enough of a low to take out the prior low. We've come up, we've come down, right? What do you think we're doing? Right? This obviously looked a little bit like me. All of a sudden, the power comes in. Right? This is where the sellers are. So if I was to kind of look at anything, my auction area is going to be this last green candle, right? Now, I can then measure how far the 50% marker to say the 50% that green. You're talking 30 pips, right? On a 4 hour time frame. 30 pips is probably around where your 4 hour, at least your daily ATR is currently at the moment, right? So do I expect a move up? Yes, right? Do I see this as a move up that can be sustained? No, right? So if I'm looking for an entry on this particular point, what I'm trying to find and what I'm trying to understand, from my own perspective, is we've powered through. We've got one potential target here, a potential target low and a potential target high there. Right? This is the auction area for me. Right? We've probably got this last little piece here, which I would say this one being the last buy before you sell, right? So clearly there's going to be buyers from here all the way up to this strong high, right? Now, let's say we do want to find more information, right? And you're trying to kind of work this for yourself and say, let's have a look at a couple of different things. We can stick a reaction on, and first of all, I'm going to go to this low. Right? So for me, this is where the clustering techniques comes in, right? I've got let's change the colors on this. I've actually got from here an 86 to a 786, right? So I'm going to make that my colors. The 618 is exactly the center of the auction area, right? So that's probably my, my weapon of choice in terms of an expectation, right? That's what I'm looking for in terms of the golden ticket. 50% marker, obviously just a little bit in between the two, so possibly even 50% in between the two. Right? So I might mark that up as well, just for the sake of this video. Right? But these are things that I'm doing, I'm doing this in my head, right, as I'm looking at the charts myself. So I got a couple of potential target areas there. What I'm going to do then is drag this obviously down to that other low, right? And all I've done really, look, is I've increased the target range there. I've dropped the 618 down to the bottom, right? So probably I'd mark this up again as another orange, right? I might change the orange color for something a bit more vivid there, right? And I'm just looking at this saying, well, where we are right now, put another purple in there, that's a 50% marker, right? On these smaller time frames, I'm looking at this, I'm saying to myself, right, where are the biggest clusters? What's going on? What could happen here? What's the likelihood that we want to go, all the way back up? Right? Now, I think given the strength and the change of character and the bigger bias down, I don't really see any reason to strike this strong high, right? And therefore, I'm looking at is one of these weaker lows. Right? I'm going to put this, say, white, put this now as a weak low, right? And therefore, what I'd like to see is in this cluster of, what's going on, I want to see the character change on the smaller time frames as we start to near these levels, right? Now, we could argue that we are nearing the levels, right? We're getting closer to even the lows of these levels here, right? But we haven't actually pinged them yet, right? Now, I'm looking at the gap, obviously 50% marker. I'm looking at the auction area. I'm looking at that last, buy before you sell in terms of big movement. I'm looking at the higher picture, right? The bigger picture in terms of the strong high. And these are all things that are forming my bias, right? Now, if I come into the stochastic, because this was part of the question, right? The general idea, right, and this is again, just don't put too much emphasis on it, right? The stochastic is simple. If this is going up, price is going up, right? If there's a red bar at the bottom, the chances are we're not really done yet, right? So as it comes into the price here, right, red bar appears, right, and this false bar is saying just be wary, right? This false bar is saying doesn't have to go up, doesn't have to go down, right? The false bar is saying when the price is in that range, right, you could expect a further grind. There's going to be more activity in that area. We then ultimately fuel through and the false bar disappears. Now, obviously, these little things at the bottom, these are just volume, right? So again, high volume, in a small candle, or obviously a big volume and a small candle. These are the kinds of things that I'm looking for. Right? So, with all that being said, I'm now looking on a 4-hour time frame, and I'm saying to myself, well, we've got no false bar. It's a good sign. We're nearing an area of interest to me, and we've already got to a point where the stochastic is practically overbought. What are the things that this is saying to me? Well, all of this now is, yeah, my bias is probably still pretty much short, right? Now, I'm not trying to guess these levels because we've probably got quite a big pip range from that high there up to the strong high. We got an 83 pip range, right? Now, I don't want to risk that. I don't want to gamble that in terms of where's my stop loss, because a trade at this point, right, would probably look something like this, right? If I had to take a short position, right, I'd want to put a stop loss, 3, 4, 5 pips up above there to take profit down there, right? That isn't a trade, right? That's just silly. So at this particular point, no trade. Right? Now I'm going to do exactly the same thing. I'm walking through this. I've just walked through obviously a weekly view. Right? Now, as we can see on this 1-hour time frame, all a stochastic is saying is we're not quite done yet. Green powerful candle, right? As we near the zone. Now, what did I say in terms of the price? What did I say even in regards to Bitcoin? If we get so far, there's only so far we can go because we've run out of juice. Right? You've got to find new kind of creative ways to attract new buyers. Right? And at the moment, everything we've done, everything we're doing, right, it's kind of failing the same way. So it doesn't matter what the news is. It doesn't matter what the instrument is, right? This could be Bitcoin, this could be gold, this could be euro, right? The same logic will apply throughout. So you're looking at this and saying to yourself, right, we know 4-hour stochastic is pretty much overbought. We know weekly time frame pointing down. Right? We know that we're nearing an area of interest. All I'm doing now is not trying to say, hey, let's go in for a short here. What I'm saying is my bias is right now on this 1-hour time frame, we are currently making high, right? Which means the pullback of the pullback, weekly down, daily up, right? Daily potentially just changed its change of character, right? So its character has changed. That change of character now requires its pullback. Its pullback on that 4-hour time frame looks like this. Right? So we've had the break in the new low. We've now come up, down, back up. This is an A, a B, and a C. Right? So we could even add more to the cluster by saying, let's go in and stick a Fibonacci extension, for example, right? Where does this take us? Where could this take us? Well, look, where does all the kind of the juicy stuff, where does all this happen? Well, for me, 1382, 1236, right? There's kind of my range in between there. I'll change that to be a different color, just again make it kind of easy to see the clustering, right? And all of these things, I'm not saying these are where we need to be or this is where we are. I'm saying overall, this is a situation is giving me more and more confidence that in this larger green box is where I expect to see a reaction, right? I could be wrong and we react straight from here, right? Could be wrong and we react from the next one, the next one, the next one, right? I could be in a position where I'm trying to refine why this green box is probably the most likely place in terms of a change. Okay. Now, at this particular point, I'm looking at this and I'm saying, right, let's drop down one more time frame again. Now, on this 15-minute time frame, we now have a false bar on display. And the false bar is we're not quite done yet. Now, we know that the 1 hour wants to pop up. We know a lot of retail traders, a lot of newer traders, what they're going to be saying is things like, we've had a green candle, 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 we probably want to pull back. Right? So what you're likely to see is a wick followed by an instant fill of the wick, right? Followed by a sweep. So all I'm saying is I'm following this notion all the way through to meet the criteria for a potential entry for me. Right? Now, what I'd like to do is in the next 16 minutes, I'm guessing with the kind of power that we've had there, we're going to be pretty much in the same situation as the 4 hour. What you're then going to have is obviously a 15-minute push down and the fill of the wick, like I've just mentioned. Right? Which means that then will probably take us through sweeping out, which means, we should get, let's see what the levels are from there. Levels from there to even say the low of my box, you're talking 19 pips. On a 1 hour time frame, 19 pips, very, very achievable. I mean, what size is that candle there? That there is 27 pips, right? So it doesn't even have to be a 1 hour, it could be over the space of 4 hours. But this is giving me more information in terms of where I'm trying and wanting to take a trade. Right? So if I was to take this trade now in terms of a short, right, what I'd be looking for is price to obviously come up, price to come back down, right, price to come up again, sweep out obviously all those long positions and early shorts. Right? So early shorts here, new longs here. And then ultimately, I'd be looking for a type of trade setup that would look something like this, right? Let's just use as an example the 50% marker. We got a couple of crosses. We got the 50% the green box. We've got the 618 of the, which is why I marked them in orange. We got the center of this purple box, which I don't even remember what that was right now. This is the point of overcomplicating it to yourself, right? I'm only doing this for the sake of the video. This type of analysis is 30 seconds in terms of really, once you understand it, it's why this area, what do we expect to see in this area, what's my biggest bias. Simple as, right? I'd be looking to put a stop loss just above, and then ultimately, my trade would want to be at least down here, right? If not, obviously into the bigger time frame with some kind of scale, right? There's the internal range, right? Then obviously all the way down there, we've obviously got the external range, which is even further down there, right? So that's the type of trade, right, that I'm looking for. I'm not saying I'm going to take this one on the 1 hour time frame to take it down to the weekly, but the general idea is that's going to look a lot more attractive than a trade where I've got a negative risk to reward issue. Right? Now, at this particular point, if obviously, we get a bit of news, we get something that actually triggers, a very violent move down, let's just say that we get pinged in, right? And I say to myself, right, I'm not looking for a touch and drop. I'm looking for the change of character, which means my entry might end up being, something like down there instead, because that's where the change of character occurs on a smaller time frame, right? The general idea is once I've got that type of thing there, that general idea, I've got the logic already kind of built up, the story built up in my head. What I'm then looking for is obviously the entry criteria. And the entry criteria is bigger time frame push down. Medium time frame, the daily, is ultimately a pullback, right? Is how I'm reading it. And this is again subjective. Once you've obviously got this little bit of information sorted and ready and kind of already processed, then obviously you can come into these entry criterias. Now, if you're still confused with all of this and the kind of the example situation, you know, the general idea is go back and spend a little time watching the videos, right, in terms of Elliott Wave, right? Go in and look at things like Wyckoff, right? And the reason that these are important is not because you're using them on a daily basis. You're just looking at what is the bigger picture trying to tell you. Where are we in that bigger picture, right? Now, I could argue that on a bigger time frame here, am I likely to want to expect a weaker dollar based on, World War III, based on, other criterias, right? Now, if that was the case, I'm saying, well, potentially we've had a nice little reaction, right? Now, this reaction, obviously, in a Wyckoff term, means that we're still going to want to come down to give me whether it's a spring, whether it's a test, right? Regardless of what it is, and this is why I'm saying it doesn't really matter to me. That the point being is that on this larger time frame, I don't care what we're doing. I just care where we are in terms of what we're doing, right? And if that supports my biggest belief, my biggest bias on that bigger time frame, then I know right now I'm not even looking to take this long, right? I'm looking to take this short when we've run out of juice to the long side. Simple as, right? So anyway, I hope this answers, kind of all of the questions that, were asked, obviously in the week. Sorry, I couldn't do this obviously over the weekend. But, I hope this does help in that bigger picture. And I can think, in terms of the one particular question that I've had there, all I want to do, look, is to get across to yourself and other members here. If in doubt, stay out, right? And it's kind of as simple as that. The whole point of these types of techniques and the whole point of this type of teaching is to get you into thinking you're kind of protecting your capital, you're protecting your own situation, you're removing kind of the frustration because you've now got a bigger bias understanding. You now have a strategy technique that is painting the picture for you on your medium time frame in terms of, as I just painted with Euro, for me, bigger downturn, bigger term downtrend, followed by obviously a current pullback situation. I really want to see that pullback kind of ending on the smaller time frame being 4 hour. And I want an optimal entry on a 1 hour, 15 minute, even a 5 minute time frame that is going to give me best bang for buck, right? One trade like this in a month is enough to give you, a very, very nice monthly income, right? So in the grand scheme of things, don't try to gamify it. Don't try to be in and out every move. Don't try to, kind of absorb too much information. Go back to basics, right? And the basics that I suggest, if this is still kind of unclear to you, is start with Elliott Wave, right? Put a little bit of emphasis on Wyckoff. And the reason that I think, Wyckoff is definitely key for things like this is it'll give you an understanding and an appreciation of what the price is doing and how it behaves in and around these levels, right? Because you're going to see Wyckoff even on a minute time frame, right? Although it's not as valuable as a weekly time frame or a monthly time frame, daily time frame, you're going to see them on these smaller time frames, right? So when you start to see the price, coming up, just before I leave and finish this video, right? I know this one's a longer one, but this really hopefully does help the question. Is that if we've got a Wyckoff box and the prices obviously come up, right? It's the manipulation that we expect, right? You're going to get a massive run up, right? That run up ultimately is going to be thinking, right, we're off to the moon, off we go. You're going to come back down and you're going to put doubt, which is the test. You're going to put doubt in the mind of obviously all of the new buyers, right? So this coaxes a lot of buyers to get out thinking, I was wrong, let me go, right? Then ultimately you get, your first UT, right? Or obviously a UTAD depending on. And this basically attracts new buyers in and it also then kills the shorts that were winning obviously at this point in time, right? Then obviously you come back down, right? Then at this point now, you've got this kind of ascending move, or descending move, sorry, that ultimately gets triggered by a sweep, right? And this is all, all we see with the UTAD is a sweep, right? And at this particular point, that sweep is taken and we kind of come crashing down, right? And the reason for that is that we had the fuel from here to go up, but we didn't have the fuel from here to go up even more, right? So at that particular point, when you understand that this happens on, more or less every time frame, you're going to appreciate the manipulation that goes on and why you don't just take a level and ping. Right now, when I say take a level and ping, what I'm saying is I drew, a very, very, very long um, box here in terms of my, my risk to reward ratio. But the reason that I don't just say, oh, I'm entering when it hits my level, is that I still don't have any confirmation in terms of the change of character, the market kind of structure shifting, et cetera, et cetera. Now, as I mentioned earlier, guys, look, in terms of the wick fill, you can see this would have attracted a lot of people in there thinking, well, we had a level. Because again, you stick a moving average on, you stick a MACD, you stick an RSI, the chances are it's probably telling retail traders to go short here, right? So I'd like to see, a red candle, and then followed by an even greater sweep, right? And that ultimately on a 5 minute time frame or a 3 minute time frame, a 1 minute time frame will probably start to look very, very like, much like a Wyckoff distribution pattern, right? Now, at this particular point, all I'm looking for is more information to say, hey, take this short if you want. Is this one of the best setups? I don't know yet, right? I haven't really analyzed this apart from doing it live with you guys. Um, Obviously now, overall, what I want to do is go back and kind of assess the situation, in my own way without all the kind of the colors and the rainbows on the charts. And ultimately just break it down in exactly the same way, but not having to think of the words that I'm saying, in terms of the video back to how I would analysis, how I would do my own analysis on, on this in terms of the current situation and current move. But you get the general idea in terms of putting, what's in my head and what I'm trying to put out to you guys. It's the same kind of thing. Obviously, it's just without all the kind of the mess on the chart. So overall, my bias stays the same. We've got downtrend, pullback. I'm looking for an optimal entry on a smaller time frame of the pullback for exchange of character. Right. Anyway, hope you enjoyed this one, guys. Thanks for watching, and I'll see you on the next stream.